today's episode, we are going to discuss how I make over $200 in dividends per month. So, we're going to look at each one of my dividend generating accounts. We're going to go in depth in the numbers so you guys can actually see the details. I'm going to reveal all the juicy bits here of my accounts. And we're going to talk through how each one generates dividends for me and what the strategies are behind each portfolio or each account. But first, if you want a channel that is going to help you speed up your journey to financial freedom through dividend growth investing, stately investing is the place for you. So hit that subscribe button below. Let's get started. All right, so let's get started with today's episode. We're going to break down each account for you. And first, we're going to start with M1 Finance. So in M1, I actually have 3 accounts, and we're going to go through all of them. But the first one, and the one that most of you are watching my videos for, is the passive income account. So I opened this account on September 2019, so just around a year ago, and that's what inspired me to do this video, to track, I have a year's worth of data now, so that I've really started looking into dividends and using dividend growth investing as my primary strategy to achieve financial freedom. So I wanted to make this video, and we're going to kind of go through the dates, the size of each accounts, the strategy behind each one, and then the holdings and how much I'm making in dividends each month. So for my passive income portfolio, my passive income account, we're up to $35,299. And as you guys, if you've watched my previous videos, know that this account is really focused on generating passive income through a bunch of dividend generating stocks. So I hold 39 individual stocks. You guys will be familiar with most of them. Again, check out some of my other videos. But these are mostly dividend aristocrats or REITs that I believe are very strong. I do a lot of financial analysis before I pick any of these stocks, and then I also do just kind of news research and making sure I understand their business. But overall, this is my primary strategy for generating dividend income. And so over the past 12 months, this account has averaged $30.87. So quite a significant jump in over a year, right? So to start out with $0 from dividends to be up to $30 a month, you can see I'm on track to do around $360 a year. So that's pretty awesome for 1 year's worth of work. Let's jump over to my next M1 account, which is the M1 Roth account that I have. So this Roth account is fairly small. And actually, normally I would encourage you to invest the cap basically on any Roth IRAs that you have. In my personal circumstances, I can't contribute the full amount. And so I started this account, but I really just let it sit after the initial investment. And so this strategy is really a mixed bag of things, right? So it actually includes all of the holdings from my passive income portfolio, so those 39 stocks, plus some dividend aristocrats that aren't included in there. So something that either I consider a little more risky or something that I was just looking to try. It also includes the retail sector, plus some ETFs. So it's, like I said, it's really a mixed bag of 47 stocks plus 5 funds. I did open this account at the same time, and the account size is currently at $2,363, generating me almost $3 a month at $2.98. And then the last M1 account that we're going to look at is actually my liquid assets or the bonds account that I have. And so again, I opened this in the same month as my other 2 M1 accounts. This account size is hovering right around $5,000, so it's $4,926. And the strategy behind this one is that I keep some money in bonds in case of emergencies, right? So this is like part of my emergency fund, and I recommend to everyone that before you start heavily investing, make sure you have an emergency fund in case you lose your job or you're injured or you have some kind of family emergency, things like that. You need to have usually they say around 6 months worth of your income to have sitting aside as an emergency fund. So this is actually a part of my emergency fund. I actually keep portion of it in bonds rather than just all having it sit in cash, because at least that way I can generate some income or some interest on it. And so, like I said, this is really for emergencies, but also potentially for investments during dips, right? So if the market is down significantly and I want to make some purchases, I know that I have this kind of pool of cash that I can tap to make some purchases. So I only have one holding in this account. It's EDV. It's a Vanguard extended duration bonds, treasury bonds fund. And so it does generate some dividends. At this moment in the trailing 12 months, it's been about $1.81. So we're going to move on to my next big dividend account, which is my Robinhood account. So I opened this account back in January of 2016, and currently the account size is sitting at 17,331. And so you might be asking, why do I have a separate dividend specific focused account? But the strategy is slightly different than my M1 account in that this is for undervalued dividend stocks. So these are individual stock purchases I'm making rather than an M1 where I just contribute a bunch of money and it distributes to those 39 stocks. Here, I'm picking the actual stocks and making the individual purchases because I'm purchasing at times that I think the stock is undervalued. And so some of the stocks are slightly different than those in the 39 in that passive income and one passive income portfolio that I showed you guys earlier. But there is quite a bit of overlap. In particular, my highest holding, and this is Store. I think it's up to around $6,000 worth of Store shares because Store was just being hammered by the current coronavirus situation, and I felt that would recover. I'm up almost 30% or so on that investment that I made into Store. So again, these are dividend stocks that generate quite a bit of dividend income. As you can see, the average monthly dividends is at $9.22. However, I'm picking these stocks at times when I think they're undervalued, and then I will hold them hopefully forever, but potentially I could sell these as well. And then a quick note on this. So if you guys ever see my total Robinhood account, which I think I've shown in other videos, I previously used this account for value stock picks, so kind of penny stocks or things that I thought were super undervalued, very cheap. But I've actually shifted that. So I've sold all of those stocks previously, and in the past few months, really the past, let's say 6 or 7 months, I've shifted this to picking undervalued dividend stocks in particular. So there was a strategy shift, even though I opened this way back in January of 2016. So the next account that we're going to look at is my Fidelity Rollover IRA. And this is actually my highest dividend generating account. You can see the dates here are a little strange in that it's 2011, 2017, and then 2020. The account size is $112,556. And the current strategy for this is a set and forget ETFs. So if you'll look at this, all of these holdings are funds that I hold on to, not individual stocks. So VUG, VIG. So VUG is the Vanguard Growth Index. Or growth fund, I should say. VIG is a dividend-focused Vanguard fund. MTUM is a momentum-focused fund. VYM is the high-yield Vanguard fund, and NOBL is the dividend aristocrats. So 3 of these are dividend-focused, and then 2 of them are more growth-focused. So it's a mixed strategy there, but really it's about setting and forgetting these and never having to touch these. So again, the average dividends here are $78.92. So obviously my biggest generator of dividends. And some notes here. So this was originally, a 401k from one company that I worked for, and then a 401k from another company that I worked for, and I eventually rolled over those accounts. And then recently in 2020, I've actually combined both of those and rolled them over into this particular IRA. So it actually makes my cost really hard to calculate and figure out, making my yield on cost really difficult to figure out. But in my latest shift, I really did focus on dividend and growth ETFs, as I have talked about, and you can see that it's paying off with this large amount of dividends, monthly dividends. So I think in the future, I don't plan to touch this money. I don't really plan to invest anymore. Like, it's not like I'm putting more money into this rollover IRA, but it's a set and forget, and hopefully it will just keep producing dividends until I retire and even after I retire. So my next account that we're looking at is my first TD Ameritrade rollover IRA. So another rollover IRA from a different company that I worked for. And I opened this back in March of 2016. The current account size is $77,518. And again, it's a set and forget. But in this case, it's index funds. So Slightly different, right? IVV is actually the S&P 500. V4X and VHYAX are Vanguard funds. It's a little different because TD Ameritrade and Vanguard, there's some differences there. And then VUG as well. So similar, and you can see that I'm generating similar amounts to my other fund. It's slightly lower, but then again, this account size is also slightly lower. So strategy is pretty similar to that last Fidelity account we just looked at, but my monthly dividends in this one is $65.52. The next account that we'll be looking at is my Roth IRA and my TD Ameritrade. So remember, I have a Roth IRA in my M1 account. Again, I opened this one in March of 2016, and the account size is sitting at $3,938. So these are funds that I wanted to try out, right? So I wanted to try some sector experimentation. In particular, I was looking at healthcare funds. So the first two, IHI is a medical devices ETF, and then VHT is a Vanguard healthcare fund, and then VHYAX is the high yield Vanguard fund that we're familiar with. So dividends here are actually pretty good for how small this account size is. It's $5.64 a month. Again, this is a mix of healthcare funds and high yield dividends. I actually think these healthcare funds have actually paid off pretty well as far as growth. And if I ever plan to sell these stocks, I would actually make a fair amount of money on my gains. The next account is Acorns. So some of you guys may or may not be familiar with Acorns. It is a application that allows you to essentially do roundups from transactions that you make and put them into an investment fund. So say you buy something for 95 cents, the remaining 5 cents of that dollar would be contributed to your Acorns account, and then essentially they do the investing for you for those roundups. So I opened this in January of 2015. My account size is small at around $2,800. And then my holdings are actually, so Acorns has kind of like a aggressive or like medium aggressive or like a medium mix, right? And so based off of those selections that you make, you can only kind of make a selection based off of your investment style. And then they pick the funds that they invest in. So you can see the funds here are VOO, IJH, IJR, and IXUS. So VOO is basically the S&P 500. It's the Vanguard fund that tracks that. IJH, I believe, are medium-sized companies. IJR are smaller-sized companies, and then IX is international companies. And so average monthly dividends is $4.74, which is actually fairly high for how small this account is. I believe this actually has the highest yield on price right now of any of my accounts. And this is a reminder that I don't put any other money in this account than just rounding off credit card and debit card transactions. So if you have a credit card, you can put all of your cards there, and then it just rounds up those transactions and puts money into your Acorns account. And then my other account here is my Charles Schwab account. This is the last one, I believe. So I opened this in November 2016. The account size is fairly small again at right around $17.50, and has random stock purchases. So there's very little strategy here. So the holdings right now are Store, Siri, which is Sirius XM, and then APTO, which is a biotech pharmaceutical company. So average monthly dividends is actually decent, 1.74 or $1.74. And notes that I've started out this as an employee stock purchasing program, and it had some stock grants in there from my previous employer, but I actually sold all of those things, and then I've saved this for just random stock purchases, things that I've looking to buy more of. And so the Store is actually in a few of my other accounts, but the SiriusXM and the APTO are really only in this account. And potentially I could be adding more, but I haven't really touched these stocks in a while. Sirius and Store actually are the monthly dividend generators here. So in summary, we are looking at all of my portfolios on this kind of dividends to growth axis, right? So if you look at dividends, they tend not to be hugely growing companies, right? They have the money to produce dividends. There obviously is some exceptions to that rule. You can check out one of my other videos on dividends versus growth and why not have both. I'll put a link up top. But also you can see just kind of along this axis, these accounts kind of serve different purposes, right? So my M1 accounts tend to be more focused on dividends. Similarly with my Robinhood account, really focused on dividends, but also value, right? So there is some growth there. The Fidelity account is mostly focused on dividends, but also has some significant growth funds included, whereas the Charles Schwab account has more random stocks included, but it is mostly focused on value and growth, although there is some dividends in there. Similarly with TD, there's really a mix, but it's more skewed towards the growth. And then really my Acorns account, even though it's actually one of my higher yielding accounts as far as dividends concerned, is actually a growth account. It's mostly focused on growing through rounding up transactions. And so if we look at my total sets of accounts, we are at $258,482. So not bad, over this period of time where I started investing, right? A lot of that is coming from that Fidelity account that I started way back in 2011. So remember, time is your best friend in investing. So start early and invest often. But then if we look at my overall average monthly dividends across all of these accounts, it's right at $201.43 for the trailing 12 months. So over $200 a month in dividends, which is outstanding. I never thought I would make it to this point, and there's only upside from here, right? Some particular notes here and why I think this will continue to grow. I do have some other non-dividend generating accounts. I didn't include those in this video because we're really focused on the accounts that have dividends and how they're growing for me. But then I'm slowly shifting pieces of my portfolio to accomplish my dividend goals, right? I really think dividend growth investing is the way that I'm going to achieve financial freedom and retire early. So I'm trying to shift as much as I can of my portfolio while still keeping growth in mind. Growth is important. I'm trying to accomplish more of that with the moves that I make in my different accounts. So, which is why you'll see more of my videos on this side of the spectrum, right? On my M1 and Robinhood accounts, because that's where I'm actively investing and putting most of my new income, the income that I'm generating now, into these accounts so that I can do more focus on the dividend growth generation portion. And then lastly, most importantly, I reinvest all of my dividends. So I'm not using this money that I'm getting from dividends to actually spend it or take it out. All of that money gets put back into these vehicles in order to make me more money, right? So make your money work for you. You want to stop working for your money and you want your money working for you. So with that, I'll close out the video. Hopefully you guys enjoyed it. Please leave a comment below on different tools that you guys use to manage your accounts. What do you think about my dividends strategy and how I'm doing so far in the past year? Would love to get all of that from you guys down below. Feel free to hit that like button if you choose to, and that subscribe button. It really helps out the channel, and I'll see you guys again next week.